Welcome to the latest Motley Fool Scoreboard. I'm on in Chalk Balloon. We've got longtime fools Keith Speights and Karl Thiel giving a 1 to 10 rating to big time pharma Pfizer, ticker symbol PFE. Talk about the strength of Pfizer's business first, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Keith's at an 8. Karl, you're at a 7.
Yeah, Pfizer's been in this game for a really long time, obviously. Very long-standing big pharma company. It's not going anywhere. This is a company that at times has been, you know, the sort of best company in the space, like the Lipitor years when it had the top-selling drug in the world. Obviously, it was very prominent during the pandemic with, you know, one of the first COVID vaccines out there. Now, not so much. You know, I think they've made a few questionable decisions recently, but for better or worse, I think a lot of the pain has sort of already been felt. I mean, they do have some big patent expirations coming up, but everybody's expecting that at this point. So yeah, they come out at a 7 for me.
Yeah, I'm giving Pfizer a little bit higher score of 8 than what Karl gave. And I'm just taking the long view with Pfizer. Granted, this company faces some challenges right now, notably including a patent cliff over the next few years. But we're talking about a drug maker that has survived and thrived since 1849.
Wow.
So clearly, Pfizer's business is built for the long run.
Fair enough. Fair enough. I think over 150 years of track record's pretty good. Let's talk about management. A 10 is Warren Buffett. A 1 is Homer Simpson. This is lower. Keith's at a 6. Karl, you're just at a 4.
Yeah. So, you know, under Albert Bourla, the company's lost substantial value since he came on board, and he just came on board at the beginning of 2019. So he hasn't been there that long. He rode, you know, a big ride through the COVID years and right back down and lower again. That's attracted some serious activist investors like Starboard Value. And I happen to be on the other side of the Seagen acquisition. We had recommended Seagen, and, you know, so I was love to see it get bought out at $43 billion. I appreciated that, but that was a lot of money to pay for that company. You know, at the same time, I mean, he's not at fault for the patent expirations coming up. That just is what it is. You know, he's not to blame for any given clinical failure that they face, but he's, you know, the company hasn't met its own stated goals about product launches. It just hasn't had a great run during his time.
Yeah, I'm giving management a 6, and this is still a relatively low score, not as low as Karl's 4, but it really doesn't reflect my lack of confidence in Pfizer CEO Albert Bourla. I think he's done a reasonably good job. Since taking the helm in 2019, he's faced a lot of challenges. He inherited a lot of challenges, but I thought Bourla especially shined during the early days of the COVID pandemic. The problem is, as Karl pointed out, Pfizer share price has declined significantly under his watch. The company hasn't lived up to its potential. Again, that's not entirely his fault. He did inherit those challenges, and I do think he was kind of desperate to find some acquisitions to bolster Pfizer's pipeline and get some other new products on the market. And I think that's probably why Pfizer paid way too much for Seagen, and so I can kind of understand the mentality there anyway. But I do think, and as Karl alluded to, I think Bourla has positioned the company pretty well for the future, and so that's why I give him a little bit higher score there.
Yeah, at first I thought Karl was like, oh, okay, supporting the Seagen acquisition. I'm like, oh, he was on the other side. He's thankful for the price Pfizer paid. That's not quite as good. Let's talk about financials. A 10 is a fortress. A 1 is yikes. Karl's at a 6.5. Keith, you're just a skosh higher at a 7.
Yeah, Pfizer's a lot closer to a fortress than it is a yikes, for sure. That's why I'm giving it a 7. The company generated revenue of over $63 billion last year. It had adjusted earnings of nearly $18 billion. So those are good, solid numbers. The company's cash position is almost $10 billion. It does have significant debt load, though, of almost $68 billion. And so that debt and some uncertainty with its fortunes largely riding on newer products ding Pfizer a bit on this category. So I'm giving it a 7. I could even go a little lower, like Karl did.
Yeah, my reason for being a little lower is kind of, I mean, in a way, it's backward looking rather than forward looking. I mean, it's, you know, obviously this is a solid company with you know, a huge diverse revenue base, but I just, you know, looking back, it's a little hard to ignore. 2020, company ended the year with cash and short-term investments of $12 billion, and they had a debt load of $37 billion by then. Then the COVID windfall came in. They actually reduced their debt slightly. Cash shot up to $31 billion. And as of now, they've spent all of that money. Their cash is a little under $10 billion. Debt has ballooned up to $58 billion. So, they spent a lot of money. And what did they get for it? They got Seagen, which is a great company. I mean, don't get me wrong. I think that's a great sort of platform that they can really build off of. But they spent a lot of money for it. And, they made some, really ill-fated acquisitions like Global Blood Therapeutics. So with all that said, they're a very solid, well-diversified company and likely to see profits increase going forward.
Karl, let's talk valuation. How well will Pfizer's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, so I'm saying 5 to 10%, because I think that on the top line, they're going to see they've got big products that are going off patent over the next few years, and so that's gonna hurt them. They do have some new opportunities coming in at the same time, so I expect their revenue to be kind of flattish. But they've done a lot of cost cutting. They've taken a lot of pain already, so that I think that you could actually see their profits, even at sort of flat revenue, kind of grow over the next few years. And I think that will strike a chord with investors, particularly when you add in the pretty nice dividend. So, and in terms of safety, I'll give the company a 7. I think I could maybe even go a little higher than that, honestly, because this kind of diverse business tends to be a little safe. If there's a note of concern, it's maybe that they've already slowed down their share repurchases. I don't think the dividend is in any danger, but it is possible that they will slow the rate of increase.
Yeah, we're pretty much in alignment on this. I think 5% to 10% average annual growth is a reasonable expectation for Pfizer if its new products fulfill their potential. And so we'll talk about that with the safety score. But, the company's dividend yield currently tops 6.7%. So Pfizer's total return could easily be in the double-digit percentages. So that's something for investors to keep in mind. But a lot of Pfizer's growth depends on those newer drugs and vaccines. And you just never know if products will achieve what people expect them to achieve. And as Karl mentioned, and I mentioned earlier, the company has that big debt load. So I'm giving the safety score a 6. I could probably give it a 7, but I'm being a little bit more cautious here.
Time for everyone's favorite topic. Karl, is there a company in Pfizer's space you like more?
Well, so I feel like I've been running down Pfizer this whole time, but I'm just, the scores are the scores. But to me, an attractive value company might have kind of low scores. And I think that's what Pfizer is. I actually think it's a pretty good value investment here. The past is prologue. They've I think, made some missteps and maybe just had a little bit of bad luck. And part of it's just the natural cycle. I think they're in, kind of decent shape going forward, and the dividend's nice. But sticking in the big pharma space, I'll say Novo Nordisk here. They've also been really beaten up, but they've got a lot of tailwinds. They're not as discounted as Pfizer, but they do have some good tailwinds to move them forward.
Yeah, my go-to answer when it comes to big drug makers is going to always be Vertex Pharmaceuticals. The ticker there is VRTX. But if you're an income investor looking for ideas in the healthcare sector, I think it's hard to beat Pfizer. The company's dividend is great. I think Karl's right that they may slow down on the dividend increases, but I don't think the dividend is in any jeopardy at all.
Yeah, Novo Nordisk and Vertex, two companies that did very well in Scoreboard. I've bought shares because they both scored above 8 in the past. Thank you to both Keith and to Karl. They've given Pfizer an overall score of 6.2 out of 10. Despite the low score, I think both Keith and Karl like Pfizer, and I bought it a few months ago as a value ballast for my own portfolio. Look out for a new Scoreboard every market day at 7 p.m. Eastern. Next up is Intuitive Surgical. Till then, Fool on.